What happened in 2014 was the U.S. consumer writ large wanted to celebrate, and they went out and they bought steaks. So we saw the tightest supply since the 1940s meet the strongest demand in the past 50 years. We saw consumers, a friend of mine lives in Chicago, was at a downtown meat market, took a picture of the meat case, and they had ribeyes for $25.99 a pound. And I said, that's stupid. Who would pay $25.99 for ribeyes? He took a step back, and there was a line at the meat case. People were buying protein. That was a U.S. phenomenon in 2014. U.S. supply was very tight. U.S. demand was very strong. The United States collectively sent domestic beef prices to record levels. But the lesson we can take away is bigger than the U.S. The lesson we learned in 2014 is that protein isn't as necessarily elastic as we had thought it was. When the consumer decides that they want protein, they're going to buy it, whatever it costs, as long as they can afford it. That's the message that Dan touched on at the end that I want to spend a little bit more time on right now, is that protein demand worldwide is going to be our next ethanol in the row crop industry. We're going to see feed demand skyrocket domestically, but more importantly, internationally. So that's the 2014 story. 2015, a little bit of a different story. I'll just spend a little bit of time on cattle. I like to think we're getting close to a bottom here in this cattle market. I like to think that we're not going to see the losses that we saw at the tail end of 2015. We found a little bounce. I think we're going to range between 105 and 120 as we get through the bulk of 2016. We are seeing more cattle come into the feed yards. We have seen a lot of heifer retention. We're going to, if corn stays fairly cheap, continue to put pounds on those cattle. All quality things for corn demand. Beef prices are probably not going to shoot back to the upside. We're going to see this market languish, but I don't think we're going to see it fall out of bed too much farther. Different story here in the feeder cattle market. The cow-calf guy has been making profits for about the last 10 years, all of varying sizes. 2014, $800,000 a head profit. We're going to be giving that back. The cycles work in such a way, somebody's going to have to be a loser here in the next couple of years. I believe it's going to be the cow-calf producer. We have seen cow slaughter drop like crazy. We're retaining old cows. Heifer retention has been incredible. The heifer slaughter has been, 33, 38% of average. We are keeping heifers back. We are going to have a pile of calves in the next couple of years. Excellent for feed demand, excellent for DDG consumption. Still a lot of downside risk in this feeder cattle chart. If you're thinking of getting into the cow business, if you really want to lose some money, cows, I think, are the way to do it. If you do get into that business and you start having calves, retain that ownership. Find a custom feed yard, own those calves from birth through beef, and I think you'll be okay. Don't plan on selling them as 5 or 6 or 8 weight feeders. I believe we're going to see this market break. I think we're going to see this market overcorrect, probably go south of $1 at some point in the next 2 years. Won't be long lasting, but it will scare the pants out of a lot of cow-calf producers.